Well, hello there. Today is Tuesday, October the 15th. The month is almost over. What, another couple hours and it'll be halfway over. And then at the end of the month, we got Halloween. And my birthday's on the 29th, so it's a big month for me. Now, let's talk about the markets. We got JP Morgan, bank stocks. Now, today's a huge day. Why? Let me just show you this here. We have Citigroup, Goldman Sachs, Wells Fargo, and JP Morgan just reported. Now, remember what I told you yesterday. It's really important. The expectations for bank stocks they're estimated, they're priced in at being lower. The numbers are down 9.5% on flat revenue, 0.3% positive revenue. Now, let me tell you what actually happened. Profits up 8%, not down 9.5%, up 8%. The analysts were expecting, let's see here, $2.34 a share. We got the analysts expected a profit of $2.45 a share. We got $2.68 a share, substantially better. Now, the stock is up overnight about almost 2%, about $2. It's close to $100 stock. It's near all-time highs. And again, remember what I told you. It's not what the actual number is. It's the actual number in light of the estimates, okay? And the estimates have been beaten down so hard. 9.5% versus 8% positive, that's huge. So if this trend continues, bank stocks are going to go higher, and that's going to lift the economic sector of the economy. For example, this is the S&P 500 bank ETF. This takes into account, let me show you the constituents here. Constituents means what it's holding, so you can get a good idea of what we're talking about. PNC, Wells Fargo, Citigroup, you name it, it's here. KeyBank, US Corp, Bank of America. As you can see here, this is all the banks, okay? So if you look at the chart, you'll notice we're literally sitting right here, right below the 50-day line. If the numbers continue to outperform the expectations, which are down 9.4% from a year ago, and we're beating them so far. 1 out of 4 is beating them really, really well. Expect the banking sector to trade above the 50-day line. Now, looking at the overall stock market, we're trading at least the futures, and I believe we're going to open slightly higher. But now this is going to be the second day. This is the overnight data, so I'm assuming we're going to open in an hour and a half, kind of right here. This will be the third day. Let me show you why this is the third day. If you look at the SPY, which just shows you the daily session, that's the overnight session right here, the pre-open. So I like to look at the E-mini because that's been open all night, and that takes into account overnight session. So China right now, US and China, we're at a standstill right now. We're going to do a wait and see, but no tariffs right now. That's going to propel the market a little bit higher, but here's the problem. And I keep saying this every day. Look at the mid-caps. The mid-caps take away those large S&P 500 stocks. No, they don't take the large S&P 500 stocks. They take the biggest 10 or 15 stocks out of the S&P. Those stocks like Amazon, Apple, those stocks control, because they have so much market cap, they control the S&P and they inflate the price in comparison to the overall market. So this gives you a much better representation of the overall stock market. And as you can see here, it's a lot more choppier and a lot more flatter. And as a matter of fact, yesterday's session didn't even pass the 50-day moving average. So that's telling me the overall market's got a bit more to go. Now, if we look at tech, if we look at NASDAQ 100, this is the top 100 NASDAQ stocks. We're also above the 50-day line. But again, till we get above the highs, which are at 195, 196 area, I wouldn't go too bullish. Not just yet. There's still there's still a lot of news on the table. We have jobless claims on Thursday, and we still have 3 other bank stocks. We still have Citigroup, Goldman Sachs, and Wells Fargo. If the numbers are better, just like JP Morgan, there's a good chance we'll see more upside for the next few days. But again, this is time to be defensive. This is what you should be looking at right now. Utilities. Notice they're near all-time highs and they're trading above the 50-day line. and consumer staples, these are also defensive stocks. These are the two most defensive sectors, again, slightly higher than the 50-day line. Whereas if you look at the overall stock market, notice its relationship to the 50-day line. We're a little higher, but in comparison to highs, there's still a bunch to go. Whereas if you look at the utilities or the consumer staples, we're a lot closer to all-time highs. We're literally like a point. Yeah, the all-time highs are at 61.84. We're at 60.94, less than a point. So as you can see here, the relationship between this and also if you look at utilities in comparison to the overall stock market, to the highs, notice that. See that? 65 is the high. We're at 64 right now. So we're like a point away from the high. But with the S&P 500, with the SPY, let me show you the relationship between the highs. The highs are at 302 and we're at 297. So a little bit different. But anyway, the point of the matter is don't get overly bullish. Don't get overly bullish. Even with bank stocks substantially outperforming so far, we may be getting ahead of ourselves. I may be being an eager beaver because 1 out of 4 is only 1 out of 4. But assuming bank stocks do outperform, keep something in mind. Their estimates have been beaten down so much over the last year and that's what I was saying yesterday and the day before, that it's not going to be hard for bank stocks to outperform their estimates because they've been beaten down so much. So again, it's not that the numbers are great. They're just slightly better than the really bad expectations. Why are the expectations bad? Interest rates are low. Money's cheap. Banks make money when money is expensive. Interest rates, they make money when interest rates go up. Interest rates are near historic lows. So the fact that we're outperforming estimates is not that important. It's important from a perspective of short-term gains. It means the stock market will have some momentum to the upside. But in the long term, we are still in deep doo-doo as far as interest rates and bank stocks because interest rates are so low. And if this trade war doesn't get resolved, we may be in this environment for some time. Therefore, keep your eye out for stocks that are smaller than the large caps so you can get a true understanding of the overall stock market. Therefore, keep your eye out on the Russell 2000 and the Russell Midcap, ticker IWR. I'll update you tomorrow. Tomorrow's going to be Wednesday. And remember, Thursday we have jobless claims. And today, keep your eye out on Goldman Sachs, Citigroup, and what was that last one? It was Wells Fargo. The three big ones. Again, JP Morgan outperformed. We're looking good with bank stocks this morning. I'll talk to you guys later. Take care.